Greetings and salutations. It's David Duford at davidduford.com, home of the best insurance sales training you've ever seen in your life. And today is the continuation of my 5-part How to Sell $250,000 in Life Insurance series, where today we're going to be specifically talking about policy size. Now, size matters, guys and girls. Yes, it does, at least in the insurance business. We want to make sure and spend appropriate amount of time making sure that we maximize the opportunity, but making sure that policy size is to the level that it should be. One of the factors that determines the kind of money you're going to make is obviously the amount of coverage, thus the amount of price that you sell your clients. So you want to be in a position to where you not necessarily push for the largest size all the time, but you optimize what you can get out of the client on a deal that makes sense for everybody mutually involved. So what I like to teach insurance agents in maximizing case size is that you want to sell premium instead of selling face amounts. Let me give you a brief description about what this means. When I sell premium, what I'm trying to do is find a price point in their budget that they're comfortable with. And I talk about this stuff in that pre-qualification phase that I mentioned on the second video that I think is so important. I want them to agree with me 100% that whatever premium I show them, that they agree that that's going to fit their budget. Because then when I go to close, I already know that I've got the deal in the sense that they can afford whatever budget they gave me permission to work with. So what this does is it eliminates the objection of that price is too expensive. And I can shoot for the stars, and if I miss the stars, end up hitting the moon. So the strategy in selling the premium is start high and then work lower. The legend in the insurance business, Tim Winders, who did a $400,000 in final expense business in 2009 and 10, he would do this. He would say, Mrs. Jones, if I can qualify for this program today, would you be able to afford $150 to $200 a month? And he knew most of them would say no, so he always say, that's fine. How about $100 to $125? And he'd work down. His average case size was approximately, I think, $1,100 a month, or $1,100 a year, which is about $80 or $90 a month. And that's for a final expense case size. It's usually about $600. So huge difference. And he did very well in those years doing it. So I say all this because selling the premium allows you to maximize case size. Now the second, whereas face, you may be leaving money on the table, or it may be too expensive for the client and they just object, and now you're in a position where you got to handle a lot of objections and spend more time doing techniques and stuff that isn't necessarily conducive to getting the deal done as quickly as possible. So the second thing you can do, and I've learned this from a great agent named Travis Tubbs with FEX Contracting, he believes in rounding the premiums up. So as you're getting to the conclusion of the sale, and let's say you show up a $10,000 and they agree to $40 to $60 a month, and it's like, $63.25. What he'll do at the end is say, I'm just going to go ahead and round this up to $70 a month, or round this up to $65 a month, and keep it a round number. And what he has found is clients like that because people remember the price better. They can deduct it easier from their checkbook, and it's a solid price that kind of just makes it a little easier. Now, he doesn't round down, he rounds up. And you may be thinking, oh, well, who cares? A couple of extra bucks, no big deal. Well, if you think about it, if you can round up an average of $3 per month, that is, on some, let's say call it $5. Math is a little bit easier. So that's $5. That's 20 cases. That's $100 a month extra. That's $1,200 a year. And if you're on a 100% contract, that's $1,200 extra in commission a month. It's pretty good, right? It's like writing 2 extra deals, all just by rounding up. So this is a sneaky little way, in the sense that it's not a big deal, but death by 1,000 paper cuts, wealth by 1,000 roundups. It's kind of how you'd look at this. But it's a way to get the money up on your commission sales, and the clients usually don't mind it either. And last point here is make sure you're using a 2 or 3 option close. Don't use 5, 6, 7 different sales options and case sizes. You'll confuse the clients. They won't buy. Take 2 different prices, or 3 max, and say, which one do you want? Okay. And make sure it's within the budget range, or you have one of them that's slightly outside of it. So that way, maybe they have the option to spend a little bit more, but you're not forcing it on them too. You're giving them the perception of a choice within the limitations that you provided them. So I hope you enjoyed this video. I hope it gave you some guidance as to how to maximize your policy size so that you maximize your bank account. If you have any questions or comments, please leave them below. Make sure you like and subscribe if you haven't. If you like the idea of working with me and you like the idea of selling $250,000 in life insurance and want to work with a mentor that's done it himself, has taught others to do it too, Go to daviddufour.com, click the link at the top of the page called Join Insurance Dave's Agency or whatever it says. You'll see, it'll be obvious. And then watch the corresponding information once you get in there. Just learn more about the products and programs that I have to offer agents and working with me. And then set up a time to speak with me if everything sounds good. David Dufour is the name. daviddufour.com is the website. And I'm out of here. Thanks. Bye.